The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Let's check out where the market's at right now. We got the S&P is up about 6.5 points right now. We got the Nasdaq up 25. We have the Russell up 6.7 and the Dow up 53 points on the day. It's been slowly but surely just edging on up over there. Let's go ahead and check out our metals. On gold right now, it's down 8 points. Silver is down 1%. And copper looks like is flat on the day. Oil right now is down $1.45. We got natural gas is currently pretty much flat on the day, up 0.005. We got corn down 2 points, and soybeans are down 9. Looking on over at our FX pairs right now, euro dollar is currently up 24 pips, pound dollar at 5, Aussie dollar at 39, euro yen up 25, US yen up 15 pips, pound yen up a mere 10 pips. Really slow movement in the yen pairs right now. And we got dollar CAD up 20 with dollar franc down just a mere 3 points. And, TV season is about to start back up, right? All the new shows coming up starting next week and the week after. Why? Because that's when people get back in their normal routines, okay? So, you've heard about, after Labor Day, volatility, all that stuff, volume picks up. We've seen a little bit of that. But the normal routine cycle, and it's sort of an odd cycle I've seen, but I've noticed this, that when they start the season premieres up to basically when they start turning them off, that's when you get that nice, easy, normal cycle in the trading market as well. Because, again, people are in their normal routines. You get the same people day after day after day. So I am looking forward to it, and that's just an odd seasonal cycle that I've observed over time. All right, and let's go ahead and check it out. So, because things are starting to pick back up, and we got some news that's going to be coming out that we'll be able to take advantage of tomorrow. And I'll talk about a little bit about the strategy today, and we'll actually, play some trades on it tomorrow as well. What is the big news that's coming out tomorrow? Well, the big thing is going to be the FOMC statement and Fed funds rate, and mainly the press conference. Everybody looking for clues on QE. Can you imagine Bernanke walking out tomorrow and going, "Yeah, we're going to go ahead and start tapering back now"? That would be interesting, but I doubt that's going to happen. But people do have that fear, and so just all the fear, QE coming in, QE going away, QE is being tapered off, et cetera, et cetera. So obviously we don't expect any change in the actual rate, but we, every little key of that statement when it gets released, and then that press conference when he starts talking, it's going to be huge. So that definitely gives the opportunity for doing a straddle trade on the news. But what about before the news? Okay, well, before the news offers an actual excellent trading opportunity. I've actually done this. If you go back and find the archives on TFNN's YouTube channel, it's youtube.com/TFNN Corp, and you can go back and look at all the videos uploaded and find the dates that the last Fed funds rate came out, and I did this on air then as well. And we went in, and before the news, what happens? Anything? No, really nothing. The market goes really flat. And to me, that actually makes one of the best trading opportunities, because I can count on how flat it's going to be. And knowing that usually, a certain amount of time before the market, and this is one of the flattest, it's hilarious. I mean, you go and you pull other reports, you get a lot more, range. But on the FOMC, it just goes quiet. And so we're going to look at like some 60-minute, some 30-minute trades that expire right before the FOMC statement comes out, which, by the way, it's usually a few minutes away. But they expire right at 2 o'clock. And so, lines up perfectly with the show. And the Aussie dollar, for instance, an hour before moves about 20 pips. Okay? And about, 13 to 15 pips 30 minutes before. The euro dollar moves about 30 pips an hour before, and about 30 minutes before. The pound dollar, 35. So we go down that list, and we just put on some binary butterflies to take advantage of a flat market. And so today we're going to talk a little bit about that, and we're going to look at what is a binary butterfly, how does it work, how do you put it together, and what is it used for. So that way tomorrow, as I'm walking through it, it'll make a little more sense to you. We'll actually be doing it live, but today you'll actually learn the basic strategy. Okay? So to start off, the first thing I want to do is, I want to obviously find a range-bound market, or a market that I believe will be range-bound. This is one of the reasons I love trading this before the news, because you can actually get stats of when this report comes out, and the stats you get, you got to go back and pull them, but when this report comes out, how much did the market usually move before it or after it? So I get both of those numbers, before and after. And you scroll on down, so we're right here. What we've done is, by the way, if you don't have this, okay, if you want to participate in this tomorrow, just on demo trading, okay, just to, learn how it works, hop on TFNN.com, click on the Nadex banner. As soon as you do that, then under trading, click on demo trading account. And this takes literally about 15 seconds. There's literally no reason not to do it right now. Sign up for your demo username, pardon me, your first name, your last name, your phone number, and your email address. Okay? And when you do that, click apply for demo, and they'll send you a password in your email, and you'll be able to log in seconds later. You're talking filling out this form to logging in, maybe 30 seconds. So you can literally do that right now, and you can even start following along. Also, to help you with this a lot is hop on over to the Diagnostic Spread Scanner, click on the link right there, sign up, get access to it right away. Okay? And this will allow you to get 2 weeks free access. You can learn how it works, put all the pieces together. Once you've done this and you're logged in, we're going to do what's called a binary butterfly. Okay? And what a binary butterfly is, it's a strategy that basically says the market's going to stay in between a range. So we're going to click on binary scanner, and you could call it whatever you wanted to. You could call it, iron condor or whatever, but to keep it simple, I call actually the spreads condors, and I call the binaries butterflies. And iron butterfly. So because you're making money on time passing. You're expecting it to stay, again, in a range. And we'll go over here, and let's say, the market we pick, just as an example, let's say it's euro dollar. Okay? So I'll go over here. I'm going to click on euro dollar. And then up here at the top, I'm going to put 65 to 95. And I'm probably going to put these on an hour before. So we're looking at it coming out at 2, so I'm going to want ones that expire within an hour. Okay? So 65 to 95, time to expiration within 1 hour. That's the only settings I have. If you have any other settings, hit reset filters, then type in 65 to 95, and then bring this on down to 1 hour. Now I'm going to scroll on down here, and we may have to, right now there's not a lot of volatility because there's nothing coming out. So I'll add some time on, but tomorrow, trust me, there'll be plenty of opportunities. So we'll go down here to the 2 hours, just so I can show you the example. And you'll be surprised how much becomes available at this time. It's pretty cool. But let me go ahead and pull this up. Now I can pull up a euro dollar chart, so I can sort of put this on a chart and make it visually make sense to you, because sometimes it can be a little bit difficult when you just hear it. Okay? And so I'm going to pull a euro dollar chart up, and let's see, we'll leave that where it's always on top, make it easier. And then we're going to pick these 2 strikes right here. Okay, so again, we're assuming that this is within an hour, just for the example's sake, so we can have some binaries to teach you with right here. And we have 3367. That's not even far enough out. Hold on, let me get even further out, because it's going to be a different world tomorrow. And I really want you to grasp what's going to be going on here. Let's see, a little bit further out. We're just going to get some that are really far out, because there's going to be so much implied volatility built into these puppies that there'll be a lot of trading opportunities for you. Okay, here we go. We'll go down here. This is a little bit more like it, more like what we're looking for. Okay, and all right, so we'll pick, say, here and here. All right, and that may, I don't know if we get that wide, but I've got some pretty wide ones before. And so this has 3320 to 3400. Okay? And so I got 3320 to 3400. The announcement comes out, here in an hour. And, as if we were doing it tomorrow. And so what I want to do is I want to actually put those strikes on my chart, just to visually show you this. So again, 3320 and 3400. So I'm going to bring it down here, and I'm going to grab this line right here and plot it so you can see that. Let's see, I'll make it a little bit easier to see. Let's say we'll make it just... There you go. And then I'm going to put another one down here at 33.20. Okay? So what I'd basically be saying on this trade is it's going to stay, the euro dollar is going to stay in between this range between now and when the binary expires. Now, in this case, we're going to make sure they expire at 2 o'clock because we expect a lot of volatility after 2. Okay? So we want them to expire right before 2 o'clock. And then we're going to go in here, and again, what's our prices? We got 17 and 82 bucks. So let's just do some basic math and see how this works, okay? So if I say it's going to expire below 3,400, I can make $17 on that contract. All right, that may not seem like a lot, but just keep following along, okay? So $17. Now again, you can do a lot of these. You don't have to do just one. And then if I say it's going to expire above 33.20, right now I can make about, what is it, $18.50 on the trade. So combined, my net possible profit of the two together is going to be 17 plus 18.5. So 35.50. Now, if you look at these contracts, it seems a little nuts because if you could make 18.50, that means you're risking 81.50. Okay, on one side. And if you could make 16.50 or 17 up here, that means you're risking like $83 on the other side. So let's put that risk up. We'll just put all the pieces together so you understand this, and you can actually do this trade yourself. Anytime that you think the market's flat, range bound, etc., before news, Fridays, in the afternoon, things like that. So we have a max $83 risk on the one we're going to sell. Okay? And if we go over here, we have a max $81.50 risk on the one that we're going to buy. Let's see, so we'll just put minus 81. Let me clear that out. So minus 81.50. So that way we see the as a risk number. So minus 83. Okay? So that's our reward. That's our max reward. That's our max risk on either side. So the first thing I want you to notice is, and just answer this question yourself here, could the euro dollar expire both above 3,400 and below 33.20 at 2 o'clock? Yes or no? Can it expire above and below those prices at the same time? Obviously not. And that's going to be one of the two keys to making this trade work. So stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so welcome on back here to the Diagnostic Trading Hour. And what we're looking at right now is putting together a binary butterfly, a simple strategy where you buy an in-the-money binary and you sell an in-the-money binary in order to take advantage of time decay in a range-bound market. Okay? And so we're looking at, and this is just an example to get us ready for tomorrow because we'll have some very flat markets before the Fed funds rate. If you've ever traded it before, you know it just gets really boring and quiet. So you might as well make some money while you're watching paint dry. Okay? So, one of my favorite trades. You go in here, and what we're doing is we're selling the 3,400, saying it'll be at or below 3,400 at expiration. Then we're buying the 3,320, saying it'll be at or above 3,320 at expiration. On the sell side, we'll make $17, and we're risking 83. On the buy side, we'll make $18.50, and we're risking $81.50. At first, this seems to make absolutely no sense at all. Okay? But I want you to put the pieces together, and you'll see actually how good this trade really is once you understand the different pieces and how they fit. So once you got that basic concept down, the question I asked right before we went off the air was, could the euro dollar at the exact same time expire both above 3,400 and below 3,320? No. It could be between 3,320 and 3,400. If it did, we would make money on both because we said at or below 3,400 and above 33.20. So if it did, we'd make $35 on the trade. Okay, so $35.50 is our max profit on this trade. But it can expire both above and below them. So worst case scenario, one side is going to lose. Best case scenario, both sides profit. So if one side is going to lose, worst case scenario, and one side is going to profit, then we get to take the profit from one side and, add it together with the loss on the other side, and we'll get the net difference there. So if we take 17, if we assume, let's say it went in down, let's just say the euro dollar shot down 50 pips or whatever. So $17 minus 81.5. So now we've brought down our risk, and even though I know this is not great yet, okay, we're still working on it. But if it expires below, and we did both sold the 3400 and bought the 3320, now the worst case is 64.50 on the downside. Now, if we bought the 3320, okay, and we sold the 3400, and let's say it shoots up and expires at like 34.50 or something, and we don't do anything, we don't manage it, nothing, then we'd make 18.50 down here. We'd make this 18.50 on the 3320 that we bought, but we'd lose 83 on the one that we sold. Okay, again, still not a great risk-reward scenario, but it's getting better. All right, so 18.50 minus 83. So we got 64.50 risk on both sides, okay, if like worst-case scenario, not both sides. If it flies up, we could lose $64.50. If it flies down, we could lose $64.50. And if it stays in the center, we can make $35.50. So we definitely increased our risk-reward, because before it was lose 83, make 17, or lose 81, make 18.50. Now it's make 35.50, lose 64.50 on either side. But it can get even better. Yes, that's right. What you can do is there's one price you can count on when you trade Nadex while the trades are live. I've talked about this a lot of times before. If you've heard my show, you definitely know the answer to this one. But the one price that you can count on when trading Nadex binaries, okay, beyond it being worth 0 or 100 at expiration, but while trading live, it doesn't matter if there's 4 days or 4 hours or 4 minutes until expiration. If the underlying market is at, if the underlying market is at the same price as the strike, it'll be worth $50. Okay? So if we go over here, and let me drop my Nadex platform over here. If we go here and we pull up a Forex binary, and I'll just go to, say, euro dollar, and we'll pull up the ones that expire at, we'll get dailies, it'll be more on there, at 3 o'clock. Okay? Then right over here, look at this. Let's open this one up. This is a great example. So 33.60, it's basically trading at 33.598. So basically it's at 33.60. And look at the price of the binary. It's trading right at $50. Okay? So knowing that it's trading right at $50, why? Because it's trading at the same price, the euro dollar itself, okay? And on my chart here, you're seeing bid. So, the mark price, they're bid in the middle, right around 33.60. The binary's worth $50. And this is actually your biggest edge. If you learn about this, if you get this concept I'm about to teach you, it's a huge edge. And our risk reward is going to be very good once you learn how this works. So stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on here to the Diagnostic Trading Hour. All right, so what we're going over here is we're going over the binary butterflies, range-bound market. We're saying before the Fed funds rate, the euro dollar is going to stay in a range like it usually does. And I'm going through an example as if today was going to be Fed funds day. And so when we did a buy at 33.20 in the money binary and a sell at 3400 in the money binary. And we basically looked at it. We said, hey, we make $17 on the one we sold. We make $18.50 on the one we bought. The most we can make on this trade is $35.50 per binary we do. We can do 100 of them, make $3,500, right? So you can do whatever you want to here. I'm just giving you a simple, one-off example. And then we looked at the max risk on each side and acknowledged the fact that it could not have max, it couldn't lose on both sides because it can't both expire above 3,400 and below 33.20. Okay? So the last thing I left you with was the one price we can always know about a binary while it's trading, whether there's days, hours, or minutes left until expiration, is that when it's trading at the strike, it'll be trading right at $50. So if euro dollar's at 33.60, exactly, you're going to be basically right at $50. And now I use a little bit of a rule on this. I'll go in and I'll, you got to deal with bid-ask spread and all that stuff. But like right now it's at 33.604, and look at it, we're like right at $50. Okay? So that's what I want you to understand. And, notice how it's like 47.50 by 51.50, and it's sort of just going back and forth across the board there. But that's what's really, really important for you to get the main concept, okay? is that it'll always be worth that price. And by understanding that, you can use that knowledge, that's your edge. You can use that to your advantage to actually really clean up the risk reward on this trade. Because trading more than anything is about good risk management. First and foremost, good risk management. You got to survive long enough to get decent at trading. And even if you are good at trading, you can blow your account out in seconds and minutes, days. We've all probably done it at least once, and we've seen people do it, and I've seen horrible losses by people who had bad risk management. So we want to have good risk management on our trades. We want to have decent risk reward and good probability. This is a high probability trade. The stats are in our favor, okay? Just historically, what happens before Fed funds rate? It stays flat. The stats are in our favor. If it stays flat, we will profit. If it moves up a certain amount, in this case like 40 ticks, we'll profit. If it moves down like 40 ticks, we would profit on the trade. Okay? So again, the stats are in our favor. So understanding that the stats are in our favor, and so we have a high probability trade setup, but still our profitability is not in our favor. We're basically at a 2-to-1 risk to reward. We're risking $64 to make 35. So let's drop that down and go, what would happen if the one that I bought, let's say the market went down to 33.20. What would it be worth? Well, I bought it for I bought it for $81.50. I had some of that backwards, but I'd make $18.50. So I bought it for $81.50 to make $18.50. So if I bought it at $81.50, okay? I know that can be a little confusing on the buy and sell, but make it simple for you. The price you buy is your risk if you're buying. The price you sell is your reward if you're selling. So it's just opposite. But anyways, not to get too far off track, if I went in and I bought at $81.50 and I sold, so actually we'll start with the 50. I sold back at 50. What would I lose on the trade? Okay, I'd lose $31.50 on that side. Okay? So if I went in and bought this for $81.50, $18.50 prop potential, but I got out. I bought it for $81.50. I sold it for $50. My loss on the bought side would be $31.50. Okay? And what if at the same time, okay, I went in and I closed this trade out for pretty close to max profit, like a couple dollars. So we'll say I made 15. All right, and you can see like right here, we even have one trading for $2 right now. So I sold it for 17. I bought it back for 2. Sold high, bought low. Okay, that's a good thing, right? So I make $15 on this side of the trade. So now that I've made $15 and I've lost $31.50, so I'm flat on the trade. Okay, so what is my net P&L? So minus 31.5 plus 15. So I've lost $16.50 on this trade if it drops to 33.20. Now again, you can multiply this by 100 and make it 1,600. I know here in small dollars doesn't necessarily always add up, but it does add up. You just increase the quantity, okay? So risk management is not about how big or small. I mean, it is in the end, but it's understanding how to manage the risk at the smallest level, so as you increase your size, you can manage your risk correctly. But you got to manage the trade correctly first to have good risk management. So let's look on the other side. I went on this one, and let's say I sold it for 17, but then let's say the euro dollar went up. So instead of it going down on me closing out, the market went up to 3,400. And when the euro dollar got to 3,400, I closed out my trade. So I bought it for 17, or I sold it for 17, and then I bought it back for 50 at a $33 loss on that side of the trade. Okay? And then at the same time, I bought this one back. Let's see, the one that I originally bought for $81.50, I got it for $2. So for $98, $2 profit left over, remaining profit. So if I went in and got in at 98 minus the 81.50 I bought it at, I made $16.50 on that side of the trade. Okay. So now, what is my net P&L if it runs up to 3,400 and I get out of both sides of the trade? Well, if it runs up and I get out of both sides of the trade, then I can put the two together. So minus 33 and then plus the $16.50 I made, and I had a $16.50 loss. So let's look at our actual overall P&L here. Okay, so we have a 35.50 max potential profit on this trade, or we could, make money on the trade. So right here, 35.50. But if it runs up to 3,400, we'll lose $16.50 if we'll get out when it hits the strike. Not 64.50, 16.50. Remember, if we held on to it and let it expire out of the money and take max loss, then we would net out at 64.50. But if we'll close it when the market hits the strike, we'll just lose $16.50. And well, if you do 10 to 100, that's 1,600, right? Exactly. But we could make 3,500. So you got a 2-to-1. We just basically turn this into a 2-to-1 reward to risk. Okay? So I can make $35 for risking $16.50. If it goes up, I lose $16.50. If it goes down, I lose $16.50. If it goes, and it hits the strike and I get out. But if it stays in between them, I make $35.50. So that's the range-bound strategy. Okay? And notice, remember how I said we closed out at $2 and all that? Well, as time's going by, these things are going to get worth less and less and less. They got to get to 0 or 100. So I can go ahead and put that take profit in immediately. Like the one that I bought at 81.50, I could put in a sell at 98. The one that I sold at 83, I could put in a buyback at, the one I sold at 17, I could put a buyback at, 2. And yes, that would subtract $4. Okay, if I did a buyback like that, that would basically take $2 off each side of the trade. And so now my net is that if I go 35.50 minus $4, because I gave up a couple dollars on each side. Why would I consider doing that? Why would I give up all that profit? Because $4, that's like 10% of my profit. Okay? Well, because now if it, let's say, goes up a little bit and some times went by, I close out the long side. Short side still has the risk, but I close out the long side. I'm ready to close out the short side if it goes up too high, because I'm saying it can stay below a price. But now if it goes back down, I can't lose. I've removed all my risk to the short side. So it goes down a little bit, time goes by, I've removed my risk. Now I've actually freed up all the capital, okay, because I had to put up like $160 to do the trade. I freed up all the capital, and now I'm free to do another trade, look around, see if there's another trading opportunity. I've also removed all risk. My winning trade can no longer become a losing trade, and that's good profit management. So again, you got to have good risk management, but you also have to have good profit management. So which means, hey, I need to know when to take it off and not be greedy for the last $2. Okay? That's really it. It's that simple. It's what range do you think it's going to be between, by what time, buy the strike below, sell the strike above, but just make sure you have a good risk management strategy. And usually I'm looking for about 15 to $20 in that range on either side. And it's sort of funny because when I first did this, when I first came up with the strategy, my initial thought was, well, if I buy at 75, I'll make $25. If I sell at 25, I'll make $25 on the sell side, so I make $50. I'm at a 1-to-1 out of the gate. And that just sounded so much better. And I'm like, I can leave it alone. I don't even have to close the thing out. If it loses, as long as I am profitable more than half the time, I'm net profitable. So not so bad. But what I found was, well, what if it closed out? Well, if it got down there, and I bought it back and then closed the other one, I didn't have a big edge. My risk reward was not as good in the sense of this actually gives me a 2-to-1 reward to risk ratio. That one would not give me that ratio. And I get to put them wider. So the wider they are, by going for this $15 to $20 versus going for $25, the wider they are, the further away from where the market is they are, the higher my probability of being profitable. So by making sure I have a nice wide range on these binary butterflies, I've increased my chances of the market being the trade being profitable, because it has to move further for me to actually have this trade turn it from a winning trade into a losing trade. And so that's the total summary of the entire strategy, and it really is literally that simple. So if you can grab a hold of that and take advantage of it, then you're going to be very happy, because this is one of the coolest trades to do. And if you like premium collection, you're going to love this. Okay, think of this as like, maybe you're an iron condor trader or something like that. Think of it like that, but be able to do it every hour. Okay, every 2 hours, every day, every week. So you can do weeklies, of course, on a lot of contracts now, but this gives you the ability to do it every single day and at certain times a day. what times of the day are flat? Well, the Asian market is flat, right? Usually. If there's no major news coming out, usually you don't see a whole lot happening then. So you could do them around that time. You could do them in the afternoon, lunch hour, when things are flat. You could look at, just Fridays. A lot of times they're flat. If there's no major news coming out and, there's not a lot of reasons for last-minute trades, you can go in, you can check out. Friday afternoons, like 1 o'clock, 2 o'clock, 3 o'clock expirations. And you don't just have to do these on currencies. You can do these on the S&P. You can do them on the Russell, NASDAQ. You could do them on the Dow. You can do them on the Nikkei. You can do them on the DAX, the FTSE. You can do it on gold, copper, silver, oil, natural gas. And then, of course, you got currencies like Euro dollar, Pound dollar, Aussie dollar, U.S. franc, U.S. CAD, Pound yen, U.S. yen, and Euro yen. So there's a lot of different ways that you can hop in and take advantage of this trade anytime you want to. And I'm just teaching you one method is like before the news, because I can statistically know how far the market moves at that time. That gives me an edge. But, if you have any strategy you develop that's neutral-based, you could use this to help you manage that strategy. So hopefully y'all are picking up some of these pieces. And it's I had a request in the den yesterday to talk about, one of the ways that I trade range-bound markets, flat range-bound markets. And that's the number one way I'll trade range-bound markets using binaries on Nadex. And another way that I'll trade them is I'll go in and we'll look at the spread scanner over here. And let's see if we can even pull this up. I'm going to add a new feature in. It's going to actually allow you to invert the break-even distance. But let's reset the filters, and let me show you a concept here. I don't even know if we're going to have any right now. We usually have these at night. But we'll see if we can find any. Oil is probably the number one most likely contract to give it to you, if you're going to get it. But earlier in the day, a lot of times what you'll see is you'll see inverted break-even distance. And right now, let's see if we can find any. There's one, okay? Inverted break-even distance. Notice how this says, like, when you have premium, if you're a buyer or a seller or whatever, okay? If you're a seller on the contract, and meaning you're paying the premium, so I'm selling the contract to go short type thing, then usually the market has to move down a little bit to cover that premium. So you have a negative break-even distance, like you see right here. Okay? But if the number's positive, that means I'm actually selling higher than where the market's at right now. So this contract would actually let me sell oil at 104.71 when oil's trading right around 104.60 at the moment. 104.55 at the moment. So I can actually sell it higher than where oil's at. And if oil went down, I'd make money. If oil stays flat, I make money. If oil moves up a certain, but doesn't move up higher than 104.73, I could make money on the trade. So this is another way to do premium collection on Nadex. It's probably a bigger topic for another day. But you can do it on the spreads and the binaries. And one of the reasons I like to bring up this whole premium collection thing is people like to come in, they're like, oh, that premium, who's making all that premium, da-da-da-da, market makers, Nadex. Well, one, Nadex is not on the other side of the trade. They're an exchange, just like the CME. They're just facilitating trades between traders and market makers back and forth. They don't make anything on bid-ask spread. They don't make premium. But what they do is ensure that you have a good, transparent market with the ability to be anonymous. But you don't have to be the payer of the premium. You can be the collector. You can be on the other side of that premium. If you think it's too big, hop on the other side. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So, what we're going to do is we're going to check out a couple trades for tomorrow's FOMC statement. I will be looking at as well potential either binary strangles or spread straddles right before the announcement. The 2 pairs that I'll be focusing on will be the euro dollar and pound dollar. They have the highest percentage. About 96% of the time the euro dollar breaks 50 pips. On the pound dollar, 83% of the time it breaks 50 pips. And they both move on average a little over 70 pips from high to low after the FOMC. So I'll be looking at those for potential straddle strangles like minutes before the news comes out. But half an hour before, I'll be looking at euro dollar, pound dollar, Aussie dollar, dollar CAD, dollar franc, and dollar yen for potential binary butterfly trades. And we'll do those on the show, at least the binary butterflies. The strangle will be hard because the show ends as the announcement's happening. And something I want you to keep in mind for tomorrow, because sometimes implied volatility goes just ridiculously through the roof, okay? If that happens, if you hop on there and you're looking at doing a straddle or a strangle, and you notice that it's just insanely expensive, okay? Don't just abandon it. Think and go, well, would there be an edge in going the other direction? Okay? So if you're looking to do maybe a straddle on euro dollar, but the break-even distance is just massive, okay, or a strangle maybe, and it's just too expensive, then go, maybe I should invert this trade. Because what will often happen is on the FOMC is it'll spike one way, it'll fly down to the middle, it'll spike the other way, it'll fly back up to the middle, then it'll figure out where it's going to go. Well, once that announcement comes out and that big spike happens, the implied volatility goes down, and you actually have the chance to start taking some profits. So there's some pretty cool ways to trade it. But again, I just want to remind you, if you're like, wow, that's just too expensive, I'm not doing that trade, then go, wait, maybe I should do the opposite. Maybe I should butterfly this, as crazy as that sounds. Because now, if I do a butterfly into the news, so I go in and I butterfly not before the news, like what we just talked about today was like getting out at 2 o'clock, so expiration is at 2. But we're saying like a 3 o'clock expiration. If I do that, then I usually am like actually considering not taking a stop period. Okay? Because I expect crazy volatility like right out of the gate. Like maybe I expect it to fly up. It'll fly up, say, 50, 60, 70 pips, whatever. But then I expect it to fly back down and fly back up and fly back down. And just as it's going up and down, I'm taking profit on either side. So you go in, you put your butterfly on, you put your take profits on, and you leave the trade alone. And then if it sort of flattens out for a little bit, you may decide to close the trade out, and you'll make usually a small profit because the implied volatility, what's called volatility crush, happens after it. So just be aware of that. If it's too expensive, flip it. Okay? We as traders are often quick to go in and just discard something because it doesn't work or doesn't look right or we don't like the pricing or whatever. And often we'll forget to go, wait a minute. Well, if this is so bad, then the opposite, could it be really good? And so just hopefully you'll remember that. That'll help you when you're trading a lot, especially when you're looking at doing things like options or binaries or spreads. Other things we have coming out, we have the pound coming out with their purchase facility votes and their bank rate votes. Not expecting any surprise there, but will probably cause some volatility on the pound dollar at 4:30 a.m. tomorrow, around 20 or 30 pips. We're also going to have the U.S. dollar building permits coming out. Again, not a major market mover in of itself, but we should have a little volatility on that, and then I'll be joining you for the FOMC statement. All right, well, I look forward to seeing you all tomorrow on the show. Hope you have a great trading day, and stay tuned because we have another great show coming up for you right after this.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move, it's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.